in the United States, half of all small businesses are needing to find an owner to take them over as the baby boomers retire. We have this great silver tsunami of retiring business owners. So this is a real need to have a solution.
Welcome to the Edge for Tomorrow. Welcome to the Edge for Tomorrow. Today, I'm thrilled to be joined by Alison Lingain, founder and CEO at Ownership Capital Lab. Alison, thank you so much for being here.
Oh, really appreciate this conversation with you, Tracy. Very much looking forward to it.
So for listeners who are new to the concept, how do you define employee ownership? And what are the main frameworks that are practiced today?
Sure. So employee ownership is, we often refer to as broad-based employee ownership. So it's when all of the employees within a given business have access to becoming an owner. And it's a really transformative model of business ownership, both for the businesses themselves that outperform their peers, grow faster, have higher profits, sort of all of these wonderful business outcomes, and also very transformative for the employees who are stepping into those ownership roles and really reaping the benefits of ownership, which include financial benefits as well as the agency and voice and influence of what it means to be an owner. And so there's certainly more than one form of broad-based employee ownership in the United States. And, folks may or may not have heard of ESOPs, which stands for Employee Stock Ownership Plans, or worker cooperatives, which is one form of a co-op, in the case of the workers being the owners, or a newer form in the United States called employee ownership trusts, which is growing very rapidly because it offers a lot of flexibility.
Interesting. And what types of businesses and industries are best suited for this practice?
Well, the amazing thing about employee ownership is that there are actually very few companies where it's not going to be a fit.
Mhm.
So there's a form of employee ownership for most businesses. Size is the most limiting factor, so below about 10 employees, and it's much harder to do employee ownership to do it well. But pretty much every industry and every size above 10, all the way up to, thousands and thousands of workers can be employee owned. That said, there are some industries where we see some greater concentration, and you can probably imagine that there's a very strong alignment with companies where the impact of the workforce on the bottom line and the success of the business may be outsized. So we see a lot of employee ownership in manufacturing and in service businesses where really that high employee engagement culture, which is, a hallmark of employee ownership, can have a direct through line to the business bottom line outcomes.
Can you walk us through a typical path for a company to become employee owned from even initial
Sure.
interest?
Absolutely. Well, most employee ownership in the United States, and the thing that I first learned about employee ownership when I became interested in this area is that there's a whole lot more of it than people even know about. So if you count every employee owner in the United States sort of in the most generous way possible, there's almost as many people who are employee owners as there are labor union members. And the familiarity is just drastically different, right? It's sort of this best kept secret that's hidden in plain sight. So most employee ownership happens when an existing, long-standing, successful, profitable business has an ownership transition. So it's most often when a founder is nearing retirement, and we have in the United States half of all small businesses are needing to find an owner to take them over as the baby boomers retire. We have this great silver tsunami of retiring business owners. So this is a real need to have a solution. Every business has a built-in buyer base in the employees. But so you're a retiring business owner and you're, looking at what your options are in terms of selling your company. And so your options really are, the one we want to avoid is just slowing down and closing down and losing those employees and assets in the community. But you can look at finding another individual owner, working through a business broker or similar channel that's going to, likely keep the business rooted in place and carry it forward, certainly with their own vision, but carry it forward locally. You can look at, an absentee buyer or acquirer, whether that's a corporate consolidator or a private equity firm that is going to most likely change your business pretty significantly, probably do some consolidation of jobs. So you're going to lose some of your trusted employees and maybe even your headquarter gets moved. That local connection is lost. Or you could look at an employee ownership transition where you get to maintain your legacy moving forward with the business and also get market rate for your company. So so it's sort of this win-win for the business owner, for the employees, for the company, and for your legacy. So a business owner might learn about employee ownership in a couple of different ways. One is that there are a lot of firms, consultants, some are for-profit, some are nonprofit organizations that do a lot of marketing about employee ownership and invite business owners in to sessions to learn about it, webinars or in-person gatherings to learn about how this all works. Maybe this connection happens through a referral from another business owner. But the second path that you might learn about employee ownership through is by being approached by a fund that is specifically set up to support companies to transition to employee ownership. And so that fund may well knock on your door and say, hey, business owner, I'm aware of your company and we're interested in having a conversation about acquiring your business.
Interesting. And when a business owner is looking to exit their business, they're looking into employee ownership. Are employees giving a down payment? Is it sweat equity? Is it profit sharing to transfer that ownership?
Critically important question, and is often one of the first things that we need to clarify up front about how this works. In an employee ownership transition, the employees do not bring the capital to finance the transaction.
Nice.
So you can think of it this way. The employees are, doing their job every day, earning the profit of the business. And it is the profit of the business that is used to pay off debt that the company takes on in order to finance the ownership transition.
Interesting.
So rather than on day one saying, hey, employees, you got to have a big bank account or a house you can take a HELOC off of or a rich uncle or whatever, which we know most people in the United States don't have, most workers in the United States don't have. It really opens up this pathway to business ownership that you earn it through doing your hard work. So again, it's the profit of the company that pays back the loan that creates that ownership opportunity.
What's the worst case scenario?
For the employees or the business owner
I guess,
or any of the above?
for the business. I guess for any of
Yeah.
the above, if the business does not see profits moving forward.
If the business ends up not being successful, that's a bad outcome for everyone, right? And when we, back to sort of what the typical scenario is of an employee-owned business, that these are businesses. We often say that the best company that to become an employee-owned company is one that's pretty boring because they've got a long history of steady, stable profits. If you're looking at a long history of steady, stable profits and then looking forward, the trick is to not mess that up, right? But to your question, what is the worst case scenario? So if an employee-owned company goes belly up, what is the liability for an employee in terms of that business? So it works in the same way any other business structure, any other corporate structure works, where you've got the corporate veil, they call it. So the employees individually are not liable for the company's debt,
Right.
absent, this is the asterisk that the lawyers would want to put in there, and I'm not a lawyer, but absent, fraud or other, right? If there's that going on, that's a whole nother story. But if everyone's, above board and doing their work well, which most situations, the employees are not liable for that debt. It's the company. So from a worst case scenario perspective, that's how things happen from an employee perspective.
What does the transition look like from making decisions within a company, going from maybe a sole owner or just a handful of owners to now we have the whole employee staff as owners? What does that look like?
Yeah. So if you have 1,000 people who are now owners, how the heck do any decisions get made? Right?
Right.
That's often the question that comes up. And in an employee-owned structure, the management structure and the hierarchy doesn't necessarily change at all. Maybe who's in what seat, if the owner is exiting, that management level needs to shift around or change. But unless it's really broken, we're not talking about changing the day-to-day management structure within the business, because we know that management structure, if it's functioning, if it's a high functioning management structure,
Mm.
is a success factor for businesses, right? What sometimes changes, but not always, is the governance structure. So the board of directors of the business. So the role of the board of directors is usually three things. It's fiduciary responsibility and oversight. So making sure the company is doing what it needs to do financially. It's setting policies, and it's hiring and overseeing, and if need be, replacing the top executive, the CEO of the business. And so that board of directors can, and I think from a best practice perspective should, but it doesn't always have employee representation in employee-owned businesses. So it can have representation, it can be majority employee owners on the board, so that full spectrum. Um, and then thirdly, and this is, I think, most importantly, where employee ownership tends to see the biggest shift, and as a result the biggest impact on firm performance, which is in the day to day, and the participatory culture, the participatory management that happens within that business. And so how do you help a given employee know how their actions affect the bottom line of the business? Right? So you need to make sure that there is education and training and engagement to help people connect their day to day to the bottom line of the business. But we certainly see, people are smart, right? And have common sense, even if it's just around waste, right? If I'm an owner of the company, I'm going to care a whole lot more about the waste of the business.
Right.
Mhm.
And everybody knows that affects the bottom line. And then there are certainly other ways that you can help people come into and understand, the strategy of the business and how their day to day connects to it.
I can tell how passionate you are about educating people and business owners and employees about the opportunities and the ways to navigate this. And we're also just curious, what is what is the role of Ownership Capital Lab? How do you participate in these type of transitions?
Yeah, so Ownership Capital Lab we are a fairly new organization that I founded, launched on Labor Day of 2024. And I founded this after more than 10 years with a previous organization, also nonprofit organization in the employee ownership space called Project Equity. And when I first entered this space, one of the major issues that we were really addressing was, so I used the term best kept secret previously.
Right.
So is that not enough people know about employee ownership. But what we started to see maybe 5, 6 years ago is a lot of organizations beginning to organize capital. So I talked about those two paths to a business owner learning about employee ownership. And one of them is through marketing by consulting firms, and the other is through funds that are basically showing up in the marketplace like a private equity fund would.
Awesome.
And we started to see more people raising capital and figuring out that if we knock on the doors of those business owners with capital in hand, that we can actually get more employee ownership happening faster. What I realized is that there is not an organization that existed that is really focused on growing the capital markets for employee ownership. If we want to grow the capital markets for employee ownership, a focused effort on that can help us do that. And so that, in essence, is what Ownership Capital Lab is. So we're a field builder, market maker in the investment marketplace.
That's awesome. Yeah, and congrats on starting this up. Um,
Oh, thank
it's
you.
it's really awesome what you're doing, not only for businesses but also employees. This is impacting has the potential to impact a lot of people in a very positive way. And you have 15 years of experience in the space, and you have the business right now for about a year now. What does growth ideally look like in the next 12 months now?
Yeah, well, the sort of first major milestone we set for ourselves as an organization was to help foster the growth of employee ownership capital by an additional $1 billion
Mhm.
within the first 5 years. $1 billion is a nice round number, and it may sound like a big number, but compared to the scale of private equity marketplace and the M&A marketplace for businesses, it's actually just a drop in the bucket. But what it is it builds on the existing base of the assets under management. Sorry for the jargon, but the amount of capital that the employee ownership, all of these specialized employee ownership funds have to be able to do this work. Last year, in partnership with one of our wonderful partners, Transform Finance, we found that there was only $500 million in assets under management. So to grow by an additional billion, right, is a very meaningful growth. And we don't have the final census numbers for 2025, but once we come out with them later this year, it's going to be significant growth already on that base of 500 million.
Some of the exciting social media trends, or you're already capitalizing on partnerships with other organizations, the census, webinars. How do you envision moving forward from this, external presenting yourself and knowledge base and partnerships in media and specifically, on the web?
Yeah. Well, I think that everything we do has both a web and person to person connection. And one of the initiatives that we are leading is the development of the first ever roadmap for employee ownership capital. The reason we're doing this is because people started asking us if we were going to. And we were like, oh, well, maybe we should consider it. And so over the course of 2025, we actually kicked this off at the start of the year with some research supported by some students at the Haas School of Business, where I'm a social impact fellow, and they were actually supported by McKinsey consultants. And we looked at what's the growth of adjacent in impact investing spaces. So how did impact investing writ large grow? Gender lens investing, climate investing, what can we learn from that? And this summer we did a lot of focus group conversations. So we've gotten input from nearly 150 people now on into this roadmap, and we're going to be previewing the roadmap at a conference in October that's called SOCAP. If any of your listeners will be there and are interested, they're welcome to reach out to me directly. And then we'll be releasing the roadmap by the end of the year. Then in 2026, we are in planning mode right now for what we're calling the Roadmap Roadshow. So this is a series of in-person gatherings in 4 to 6 different locations across the United States, where we will bring people together around the themes of this roadmap. And this is really a dual purpose engagement and activation, because we don't want to write a document. We want to take the learnings from this document and bring them to life. So, to your question, how are we using the web and the internet? So this combination of in-person with meetings and spaces we create online, and the ability to be able to get this information out to a growing number of people, that's really how we think about our strategy.
And are there any challenges that you face as an organization to accomplish all of these amazing things that are already underway?
Well, if we could only double and triple and quadruple our team size, that would be That would certainly address some of our challenges. Um, but,
Yeah, it's
I will say
crazy.
that the trick or the challenge in front of us is how do we take that momentum and really turn it into activation? Right. So if you think about every stakeholder, how do you bring an investor in to learn about and get excited about employee ownership? And then how do you make sure they're allocating? How do you make sure they are putting money towards this strategy?
Where can people find you?
Yeah, so our website is ownershipcapitallab.capital. So don't forget the .capital at the end. We're certainly on LinkedIn, and would love to connect with folks there. And we'd welcome anyone to join our newsletter, come to our events, learn about employee ownership. There's so much to love about it, as I've shared. And certainly it is a newer area for most people, and we welcome folks in who know nothing and are there to learn.
Well, I love seeing a woman become a true market maker. I mean, you are really paving the
Mhm.
way. Thanks for doing that, and also for having such, clearly grounded, community-based reasoning to, to want to make the world a better place, and to include not only employees and small businesses and those baby boomers who are selling their businesses, but also really expanding it to the market, and including investors, credit funds, uh, across the board, finding solutions everywhere.
Well, thank you so much, Tracy and DJ, for your interest in this topic. And really enjoyed our conversation. Fantastic questions and observations. And, I love being able to have these conversations and reach new audiences about employee ownership. And I'm just so grateful to you and to your listeners for the interest in the topic.